G'day and welcome to this week's video. My name's Robert Gowdy, and this week we're going to have a look at and consider whether the ASX, the Australian Stock Exchange, lacks diversification. My argument that it does, but let's go through and have a look at the breakdown of what it looks like and look at some of the key points. So essentially what you can see here, that financials, so think four banks for the most part, is 30% of the market. There's obviously other players in there. There's other banks, Macquarie and Bendigo Adelaide Bank, and so there's lots of other financials there, but our big four banks are the main players in that space. Materials, so if you think Rio, Fortescue, BHP, essentially makes up 50% of the market. Healthcare is quite strong. We probably know that CSL, I think it's the second biggest company on the exchange at the moment. It's been a phenomenal business. That would be a substantial amount of that 8%. Industrials, real estate, and IT is 3.5%. So really the bulk of the Aussie market, and the ASX 200 is the large percentage of the market as a whole. That's the top 200 businesses. We might have 1600 stocks altogether, but there's a lot of speculative mining stuff and very small stuff outside that top 200. So dominated by two sectors. So you can see here that obviously financials, materials make up nearly half of the ASX. Not particularly our preferred areas. There have been extremely good businesses in the past, particularly the banks. If you were in on the floats in the early 90s, these have been game changers for people, and that was after deregulation of the banking industry in the early 80s. But my argument here now is that the banking has become a much tougher job. It's a lot harder to make money. The Royal Commission has had a substantial impact, and that is obviously denting the ability to lend and to make sure that they're lending to the right people that can afford to pay it back. So obviously in the materials side, BHP, Rio, Fortescue Metal, they are price takers. So we're essentially hoping that China will continue to have demand for our iron ore and our coking coal, which they use to process the iron ore within their smelters. So it's essentially a supply and demand. They cannot control what they get for their commodity. They are pure price takers. And as I said, the financials have a number of headwinds. I think there are some very strong businesses within there. Macquarie doesn't have the exposure to the housing sector that the big four do, and they're doing business all over the world. Businesses like Magellan Financial Group has been obviously one of those stellar shareholdings for the market over the last 10 years. But I think the main culprits of the four banks, they're probably the growth they've seen over the last 25 years will not be there for the next 25. Happy to be proven wrong if they are, because it's still a core holding in a lot of our clients' portfolios. And we need to remember that the passive ETFs, exchange traded funds, Vanguard or BlackRock, and certain listed investment companies that have been around for many years, think AFIC, Australian Foundation Investment Company, and Argo, which have been fantastic vehicles for investors for decades. They are full of these businesses, and they've over the time they've acquired these businesses on the floats and they've held them, which has been the right thing to do. But whether so they're exposed to this lack of diversification, the same as the ETFs, the index funds are. They're ones to be obviously low cost, but will they provide outperformance? Probably unlikely. Underperformance, well, given that these are the biggest players in the market, they'll be at or around benchmark without a doubt. If we compare that to the S&P 500, and you can see information tech is 21.5% compared to our 3.5%. So you can see financials 13%. So you get a larger range of sectors that and I think that is by far more diversified than the Aussie market, which is dominated by financials and miners. Healthcare is 14, financials 13 there. So yeah, buying the S&P 500 might give you a far more diversified portfolio. In the information tech, you can think of obviously Apple, Google, Alphabet, Microsoft, Facebook. These are very high quality businesses that I think should be part of most people's portfolios. So yeah, the Aussie market, very concentrated in a couple of sectors, and probably not my personal preferred sectors. But anyhow, do your research, seek advice, and we will catch you next week. Thank you for listening.